Welcome back to Trade and Wait, where we're going to review price action on the ES price chart, utilizing the ICT concepts, fair value gaps, volume imbalances, liquidity voids, order blocks, mitigation blocks, treat wicks like gaps, and we can divide those into quarters, the fair value gaps into quarters, divide order blocks into halves, mean reversion, divide fair value gaps into quarters. I'm not sure if I mentioned that. I'm just throwing it out there that's all swing highs, swing lows, previous day's highs, previous day's lows, previous session highs and lows. Those are your potential draws on liquidity or your true support and resistance levels. Anyway, you weren't aware, then that's just jargon. I'm just providing a lip service at this point, but I just wanted to throw that out there for now. Also, one thing you want to do before you engage price, you want to identify discount and premium. What range? What's the current range that we are in? Right. Ideally, you want to start on your higher time frame chart. In this case, we're starting at the 4-hour chart. And this is just an exercise I've been doing, right? Based off the quote from ICT, treat the 4-hour or the 60-minute chart as you would your daily chart. Something along those lines. And use the 5-minute market structure, and a whole new world will open up to you. Anyway, I like that. So anyway, this is your equilibrium level here. We can draw that, begin this, that there. Just so make that aware. Also, if you didn't want to use that, this is a modified GAN box anyway. But let me see. You want to see what that looks like? This is what's going on here. So you don't have to use that though. You can just use your fibs, because why not? Now, one thing, I was watching on YouTube, and I seen one of these shorts pop up, and one of the guys mentioned on there like, oh, optimal trade entry OTE setups is the best, because it doesn't involve any PD arrays, meaning like it doesn't require your knowledge of order blocks or fair value gaps or volume imbalances, none of that. Now, having knowledge of those things obviously will enhance your ability to trade optimal trade entries, but that's a good point. It's a good point. You just follow the rules. It's one of those things. Actually, you watch the OT videos, he'll tell you, hey, this is the only setup you need. And like he mentions a lot, that was the flagship of his YouTube channel. Like, it works. It works. It works. I'm not saying that, I'm not giving any type of financial advice. You do your own thing and make your own decisions. Critical thinking is like a buried treasure at this point. Like, do some digging, do some work. Anyway, I'm just talking, trying to get my voice back. Probably still hear it. It's kind of weak though, but feel a little bit better. Anyway, here we have a volume imbalance highlighted. If that's not your thing, then you don't have to use that volume imbalance. You can use this this fair value gap here that's in a discount, right? You could use that, and then you could ignore the volume imbalance, or you could use the volume imbalance and ignore the fair value gap, or use any other PD array that you see fit, right? Keep in mind that down close candles are supposed to support price higher, right? These down close candles, like order blocks, are supposed to support price higher if price trades into it. And the up close candles, in these cases, especially up close candles that took out liquidity, rated liquidity prior to. Those are obstacles holding price, potentially holding price lower. So that's just a reminder, not necessarily applicable to the chart as we speak, but there you go. All right, so this is a 4-hour chart. We 5 minutes in. So that's a 4-hour chart. Let's go to 1 hour. Still look like a consolidation, right? So you keep, I think I mentioned this before, right? But anyways, just keep going down. I don't do the 30-minute chart, just here for exercise. Like, I don't trade on the 30-minute chart, but it has you can treat that as your higher time frame chart too. And I'm I didn't look at this chart or I don't look at this 30-minute chart, but this is the first thing that caught my eye. Here's another one that kind of catches your eye there, and you can see price reacted to it here and here. And, I'm laughing because it's like looks like Laffy Taffy color or something, like it's chewy candy or something. Anyway, so you gotta run on stops. You have your market structure shift here. Then you have that retracement into an imbalance. So here, all of this, so that's your, look like it's relative equal highs, but look like it broke it ever so shallow. I'm not going to get into any granular details here, but anyway, end of the day, these are relative equal highs. And this is a return to origin, meaning a return to this imbalance. Also, we have a high, low, higher high, high, low, higher high, which makes this a breaker, right? And you can do wick to wick, or you can do body to body. And this is make that like a purple. And you can see opportunities there as well. For your short entry, this is 9 o'clock. So we have this run on stops here. We have a market structure shift again, and a retracement back into this fair value gap way over here. One of my trading buddies, he asked me today, is like, hey, like, yeah, that's a fair value gap, but price return back into it. And it, like, that's it. Like, and I just quoted ICT, like, we cut through candles around here. Like, we cut through candles. Like, you need to know, like, what's the significance of this here, because you don't have another one anywhere else, but you can still see that price is throwing wicks and stabbing. It's doing something. It's collecting something here. And every time I see wicks, I just think about prices sweeping liquidity. When I see wicks, prices wicking, acting all wicked. I just had to say that. First time I said that too. Don't quote me. Anyway, I see prices wicking, and I'm like, that's definitely not something you want to trade like in real time. But when the opportunity comes, you're gonna know that K is gonna get collected. This is price gathering like liquidity to me, sweeping liquidity. Right, and here you have a run on stop, so that's taken care of. You have another run on stops, then you have a retracement. And then you have this gap here. All right, so I don't like all this noise here. So we also, this X here is the, let me see here. I thought I changed the color. Let's change the color. This is the midnight open, by the way. The midnight open. On them joints is like yowzers. All right, so that's the midnight open. So if you're expecting shorts, you want to get in above the midnight open. Also, like you mentioned, discount. Obviously on and this is still the 30-minute chart, so that's an exercise at this point. But I may even whatever, bro. Like, Alexander Elder mentioned that I think he uses the 39 on 39, and his partner, Miss, Mr. Laverne, Kerry, his name Kerry Laverne. Kerry uses a 25-minute as a high time frame, and then each the next intermediate time frame should be 3 to 5 times less than your high time frame chart, and then your short term another 3 to 5, right? So use the 30, then what's that, right? Whatever, right? Probably like a 5-minute chart, your intermediate time frame. That's times, it's really times 6 though, but anyway, I don't trade this 30, whatever. So just freestyling at this point. We have a balanced price range here. Let's see if price can, because you did see price had support here in this volume imbalance, and essentially stayed above the consequent crouch run of it. And remember that the bodies tell the story and the wicks do the damage. So let's see if we see some upside potential, taking out these relative equal highs here. I don't even care. Like what's the consequences of being wrong? What you gonna say? It's wrong. And you're gonna say it's right. Who cares, man? This is just like probabilistic outcomes, and you have a ideal. You execute based on your ideal and what you see, and you risk appropriately. You win, you lose. That's what winning is, though. When you take calculated risk, winning as a result of following your process and approaching the market the same way every time, like you being the same, your approach to the market being the same, you identify edge and you executing based off of what your knowledge-based system, right? That's to me, that's essential. That's important. That's important. That's winning is a direct result of you following your process, right? So you shouldn't be excited if you got to win. It's just like a matter of fact thing, right? Likewise, you take a loss and you size appropriately, then why are you emotional about that too? Like, it's part of the game. Like, keep your losses small and try to compound your winners, your gains. Excuse me. Eh? No? That makes sense. Anyway, this 30-minute chart is like, that's why price is fractal, but it's just like, it's something about it that makes it uneasy. I feel like I don't belong here. You don't belong in this time frame, man. Get out of here. Anyway, you can still see discount premium. This is in the discount. Optimal trade entry long, potentially, as we outlined on the 4-hour chart. Let's see what that looks like. Let's see what everything looks like on the 15-minute chart, and then we could adjust it as needed. All right, so it looks like the breaker block essentially still intact. I like this. It's very, now I'm gonna talk like it's very clean. It's very clean. Price is essentially respecting the mean reversion of this level here. Anyway, stop playing around. And then we have so this is not, now this one 30-minute fair value gap turned into like three gaps, but price only respected the bottom one. Oi. But that's something, like when price is all choppy like this, then yeah, by default I'm gonna stop at the 4, see what I see in terms of potential draw on liquidity. And then the 15-minute chart is no longer like a balanced price range here too. It's like So this rebalance this, and this displaced, and then we have a pull higher, draw a pull down into this fair value gap here. So that's your entry model here. This would be turtle soup. This would be your low risk buy. Suppose you have to divide this fair value gap into quarters if you wanted to. I think that would be like and eyeball everything, man. Because this is live price action. You're not. I don't know if you're gonna do all of this. I wouldn't. You go ahead. You know, whatever works, right? So anyway, 25%. The first quarter of this wick is where we have your entry here. Boom, right? So turtle soup. Your low risk buy is here. And you say, how is that turtle soup? Right? Because it's a fake move. It's a potentially a fake move. You got consolidation, displacement from that move, and trade it into a discount, into an imbalance, and now we're targeting buy side potentially. Anyway, so that's one current setup. I don't know why. I don't need to tell you about those things. Yeah, it's 16 minutes. All right, so we're on a comfortable time frame here. 15 minutes. This is still your 4-hour volume imbalance. This is your weekly open right here. All right, and then run on stops. Didn't break structure yet. You can count that if you wanted to into that. And also time. This is not even. Then you got this retracement during the London kill zone. Still didn't take out any liquidity except the Asia low, which has been executed, been rated here. So that didn't do anything. Then 7:30 open 7:30. You have a return back into this level here. Holding below this mean reversion of this order block, this volume imbalance. Oof, I gotta get some rest. This breaker, right? Anyway, this to me, this 4-hour volume imbalance was a draw, and I was expecting price it because it was all choppy. So I'm like, oh, it's gonna pull down to the top of the volume imbalance. Then I was looking to exit the trade there, but it overshot it, hit the mean the CE of it, and then proceeded to run below it and then pull back in. And this is why it's also ideal to, like, if you like on this time frame, right, you may see this drop and then this. That's why sometimes it's good to look at a higher time frame chart at the same time, like 1 degree higher than the one that you're on, or the one that you are observing, because to me, the 15-minute chart, because of this long wick and this, so price opened up here and then dropped. So it's like a bear bar, right? And then it just sucked it right back up, right? Like, you know, sucked it right back up and then closed above the consequent encroachment. So not very, it's very interesting how a higher time frame chart can make things a lot more clearer than when you zone in. So yeah, there you have that. That's not what I use today. So hard to like. All right, so this is. Let me just run it across. I use this tiny fair value gap. Tiny fair value gap for the short here. I traded before this too. Hold up. Actually, no. There you go. That was cap. This is right here. This violated. And I can't have that being red. We're gonna change that to. Let's change it to black. So I used this trade. This and there's another fair value gap that I think is right here. Tiny. Yeah. This happened. What are you doing? What are you doing? Yes. So yeah, that tiny fair value gap there. I'm like, bro, I did not trade. I seen this. There's the return back to this inverted fair value gap. Saw that. I didn't. It wasn't part of this. All this, but I saw it. I've seen it. I've seen it. I was there. Anyway, doesn't mean nothing. This lip service, right? All right. So, boom. So we have this run on stops with this, and this is a significant swing low because you have this imbalance here, and you wanted to use that inverted fair value gap here, that would be acceptable. And then you have your breaker market structure here, so that would be your optimal trade entry short. And I think I mentioned before for myself, oh, you disappeared on me. This is a 15-minute chart. All right, so optimal trade entry, there's your break. Optimal trade entry short, went down, didn't break anything, pull back into this tiny little fair value gap, and then traded inside of this. At the time, a bullish fair value gap broke below it, kind of traded inside, and then at the halfway mark, I'm gonna eyeball that over here so the thing doesn't snap against it. So that looks good enough to me. You can fine tune that if you like. And it was holding below the C of this fair value gap, and then right, and again this was my target, and then drop down here and then continue lower, and that's 1 standard deviation based off of this projection here. Yeah, and in general, don't like using the wicks like that, those long wicks. So pull that up, and we still have a optimal trade entry here, and another opportunity here at 1 o'clock, and then the drop to 2 standard deviations. So, and this has protected. So you can kind of gain like some, like this is where the stop loss will go. The protective stop will go here. This is a entry. This 70.5 is in the middle, and then this is another entry. And you're looking again, discount. In this case, you're going from premium to discount. So you want to get in above the midpoint and find you a target. So where's the targets? So you got this swing low, this swing low, this swing low, right? All that's good money. And if you think about 4-hour levels, that's a higher time frame. Then this was a 4-hour swing high, stop run. And then where's the next level on the 4-hour chart? Would be this volume imbalance for me, or the fair value gap on the 4-hour chart. So use that high time frame chart for targeting. That's why this is acceptable. This is not like reaching. Like this is good. So this breaker was not part of my calculations, but it's there as part of the review. I'm gonna get rid of that because all this noise on the chart be like woo woo woo, right? Too much going on. I don't know. So you got one setup. You got multiple opportunities though, but it's like, and you got high, lower, low, lower, high again, lower high. So we're looking pretty good. This is lower high. This high breaking market structure here, or a run on stops rather direction, and then violating this bullish fair value gap and turn it into an inverted fair value gap, aka a change in the state of delivery, aka this price is no longer bullish, potentially bullish, it's bearish. So bomb. This is on a 15-minute chart. I didn't drop down, but we also don't see our darling. Do you see your darling here? Your market maker buy and sell model. It's not completed. I think these lows down here would complete the sell model. As a buy model is completed here. We have the sell side of the curve, buy side of the curve here. Then you can have multiple market maker buy and sell models within another market maker buy and sell model. So I'm not saying price is gonna come down here, but the model is not complete so it goes down here. Or this one here. And it looks like order flow is still bearish as well. We still back into, remember this is equilibrium, so we still back into a premium. So we can kind of see lower prices potentially. Only because I like to see blood in the water. I love seeing blood in the water. Like price action is much quicker going to the downside in my opinion. So I look forward to that. However, we are holding above this 4-hour time imbalance. I have to recalculate, delete all this, go back to the 4-hour chart or higher time frame, daily, weekly, whatever, and try to map things out accordingly. Anyway, just yapping at this point. Nice. Thank you for stopping by. Please like, comment, subscribe. Yeah. All right. Peace. I don't want to go though. All right, man. I'm out. One.